What if I told you that the $5,000 sitting in your trading account right now is actually holding you back from becoming a profitable trader, and that paying $300 to a prop firm could be the smartest investment you'll ever make in your trading career? Hey everyone, welcome back to the channel. Today we're tackling one of the most controversial debates in the trading community. Should you trade your own money, or should you trade through a proprietary trading firm? I'm going to show you with real numbers, actual calculations, and statistical analysis why prop firm trading is mathematically superior to trading your personal account for 95% of retail traders. And I'm not talking theory here, we're going to run the actual math so you can see exactly what I mean. By the end of this video, you'll understand the capital leverage advantage, the psychological benefits, the risk-reward asymmetry, and the actual profit potential difference between these two approaches. Let's dive in. Let's start with reality. According to multiple broker reports, the average retail trader starts with between $2,000 and $5,000 in their account. For this video, let's be generous and say you have $5,000 to trade with. Now, here's the golden rule of trading. You should never risk more than 1 to 2% of your account per trade. This is risk management 101. If you violate this, you're gambling, not trading. So with a $5,000 account, following proper risk management, 1% risk per trade equals $50, 2% risk per trade equals $100. Let's say you're trading Forex, and you find a great setup on Euro USD with a 50 pip stop loss. With $50 risk and a 50 pip stop, your position size equals $50 divided by 50 pips equals $1 per pip. If you hit a 100 pip target equals $100, profit 2% return. Now let's say you're a decent trader with a 55% win rate and a 1 to 2 risk reward ratio. Over 100 trades, 55 wins times $200, profit equals $11,000. 45 losses times $100, loss equals negative $4,500. Net profit equals $6,500. That sounds great. You've grown your $5,000 to $11,500 in 100 trades. That's a 130% return. But here's where reality hits. Time factor. If you're taking 2 to 3 quality setups per week, 100 trades takes you roughly 8 to 10 months. So that's 130% return over nearly a year. The compounding problem. You can only compound the money you don't need for living expenses. If you're trying to make trading your income, you need to withdraw profits. Let's say you need $3,000 a month to live on. That's $30,000 per year. With your $6,500 profit over 10 months, that's only $650 a month, not even close to covering your expenses. To make $3,000 a month consistently, you'd need to make about $750 a week. With your 2% per trade strategy, you'd need to make 15% per month consistently, or grow your account to $150,000 plus, where 2% monthly returns equals $3,000. How long would it take to grow $5,000 to $150,000? Even at an aggressive 10% monthly return, which is extremely difficult to sustain, it would take approximately 38 months over 3 years. Most traders can't wait 3+ years to make a living. They need income now. Now let's look at the prop firm model. Here's how it typically works. You pay a one-time challenge fee, let's say $300 for a $100,000 account challenge. You need to pass 2 phases. Phase 1, make 8 to 10% profit without exceeding 5% daily loss or 10% total drawdown. Phase 2, make 5% profit with the same rules. Once you pass, you get a funded account where you keep 70–90% of profits. Most firms offer 80%. Let's use the same trader profile, 55% win rate, 1 to 2 risk-reward ratio, with a $100,000 prop firm account. 1% risk per trade equals $1,000, 2% risk per trade equals $2,000. Same year divided by USD setup with 50 pip stop loss. But now, your position size equals $1,000 divided by 50 pips equals $20 per pip. If you hit a 100 pip target equals $2,000 profit, 2% return on the account, running the same 100 trade scenario, 55 wins times $4,000. Profit equals $220,000. 45 losses times $2,000, loss equals negative $90,000. Net profit equals $130,000. But remember, you keep 80% of profits, your take equals $130,000 times 80% equals $104,000. Let's put this side by side. Personal account, $5,000. Investment, $5,000 of your money at risk, Profit after 100 trades, $6,500. Time, 8 to 10 months. Return on investment, 130%. Monthly income potential, $650. Prop firm account, $100,000. Investment, $300. One-time fee. You can get this refunded after first payout with most firms. Profit after 100 trades, $104,000. Time, 8 to 10 months. Same trading strategy. Return on investment, 567%. Monthly income potential, $10,400. The prop firm gives you 16 times more profit with the exact same trading strategy and skill level. But what about risk? Let's break it down. Personal account risk. You have $5,000 at risk. If you blow your account, which 70-90% of traders do, you lose $5,000. Total downside, negative $5,000. Prop firm risk. You have $300 at risk. The challenge fee. If you fail the challenge, you lose $300. Even if you fail 3 times, you're only down $900. Total downside, negative $300, or negative $900 if you retry. So you're risking less money with the prop firm but have access to 20x the capital. Here's something most traders don't talk about. The psychological difference between trading your own money versus trading firm capital is massive. When you're trading your own $5,000, every loss feels personal. That's your rent money, your savings, your emergency fund. You experience revenge trading after losses to make it back. You hesitate on good setups because fear dominates. You over-leverage because you're desperate to make meaningful money. You check your account obsessively. Studies show that emotional trading leads to overtrading by 40-60%, holding losses 2x longer than profitable trades, taking profits too early, cutting winners short, breaking your trading plan 73% of the time under stress. With prop firm capital, you've risked $300, not $5,000. The emotional burden is lighter. Losses don't feel personal. You're trading house money. The firm's rules force you into disciplined trading. You can't over-leverage. The drawdown limits prevent it. You follow your plan because breaking it means losing the account. The structure creates discipline. The daily drawdown limit, typically 5%, and maximum drawdown limit, 10%, act as automatic circuit breakers for your emotions. Let me give you a scenario. You're trading your personal $5,000 account. You take 3 losses in a row, down $300 total. You're now at $4,700. You're anxious, frustrated. The next setup appears it's marginal, not your A+ setup. But you take it anyway, trying to recover. It's another loss. Now you're down $400. Feeling desperate? Same scenario with a prop firm $100,000 account. 3 losses equals $6,000 in account drawdown. You're still at $94,000. The emotional weight is different. The rules say if you hit $90,000, 10% total drawdown, you're out. You know you can't revenge trade. You wait for your next A+ setup, trade your plan, and recover. The prop firm structure protects you from yourself. Let's talk about scaling, how you grow your trading career long-term. Personal account scaling, you start with $5,000. To double your income, you need to double your account. To 10x your income, you need to 10x your account to $50,000. This takes years of compounding if you don't blow up. You're constantly limited by your personal. Even if you're a profitable trader making 5% monthly returns, which is excellent. Month 1, $5,000, $5,000, $250, $250 profit. Month 6, $5,000, $6,000, $381, $1,381 total profit. Month 12, $5,000, $8,000, $116, $3,000, $116 total profit. Month 24, $5,000, $13,000, $137, $8,000, $137 total profit. After 2 years of consistent 5% monthly returns, you're still only making about $650 month in profit. And this assumes you never withdraw money and reinvest everything. With prop firms, you start with $100,000 or multiple accounts. Many firms offer scaling plans, hit profit targets, get account increases. Some traders run multiple accounts simultaneously. Example, 3 times $100,000, accounts equals $300,000 total capital. Let's run the numbers on scaling. Month 1 to 3. Pass one $100,000 challenge, start trading funded account. Month 4 to 6. Make $10,000 profit, 3% per month AVG, get scaled to $150,000. Month 7 to 9. Add second $100,000 account, Now trading $250,000 total. Month 10 to 12. Combined profits get scaled again. By month 12, you could be trading $300,000, $500,000 in total capital versus still grinding a $10,000 personal account. There's a documented case of a trader who started with 2 prop firm accounts, $200,000 total capital in January. By December of the same year, he had 6 active funded accounts. Total capital under management, $750,000. Annual profit, $240,000. His take, 80% split, $192,000. His initial investment, $600 in challenge fees. Try doing that starting with $5,000 of your own money. When does personal account trading make sense? You'd need approximately $150,000, $200,000 in trading capital for personal account trading to match prop firm income potential. At that level, 5% monthly return equals $7,500, $10,000 divided by month. After costs, you'd match or exceed prop firm income. But here's the question. How many retail traders have $150,000, $200,000 to deploy into trading? Less than 5% of retail traders. For the other 95%, prop firms are mathematically superior. Yes, there are rules. Daily drawdown limits, maximum drawdown limits, profit targets, sometimes time limits. But here's the truth. These rules enforce good trading habits. If you can't trade profitably within a 5% daily loss limit and 10% total drawdown limit, you're over-leveraging and need to fix your risk management anyway. The rules protect you. Objection 2. Challenge fees are a scam. Some firms are scams. Research is essential. But legitimate prop firms have thousands of paid traders. The challenge fee covers the firm's risk. Think of it as an interview process. Would you rather pay $300 for a chance to trade $100,000 or save up $100,000 yourself over 10 plus years? This is valid. Here's the hybrid approach. Use prop firm income to fund your personal account. Trade prop firm accounts for income $4,000, $10,000 plus month. Save 30-50% of prop firm profits. Build your personal account with prop firm earnings. In 2 to 3 years, you have $100,000 plus of your money. This way, you get the best of both worlds, immediate income plus long-term wealth building. True, most traders fail prop firm challenges. But here's the reality. Most traders fail period, whether trading personal accounts or prop accounts. According to multiple studies, 70-90% of retail traders lose money. The average retail trader blows 1 to 3 accounts before quitting. The prop firm challenge actually filters for skill. If you can't pass it, you probably would have blown your personal account anyway, but losing $300 instead of $5,000. Now, this isn't financial advice. You need to do your own research, find legitimate prop firms, and make sure you have a profitable trading strategy first. But if you're currently grinding a small personal account wondering when you'll make real money, run the numbers yourself. The math speaks for itself. If you found this breakdown valuable, smash that like button. Subscribe for more data-driven trading content, and drop a comment below. Are you trading personal accounts or prop firm accounts? Let's discuss in the comments. Thanks for watching, and I'll see you in the next video.